What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what is going on in the crypto world. And happy Tuesday! We are here on time. That's kind of rare now. Sometimes meetings always just drag on, but I gotta be on time on Tuesdays and Thursdays. So we have our crypto class here at the Bitcoin Ben Crypto Clubs every Tuesday and Thursday. So gotta be here on time. But what is going on with Venezuela and how is it affecting Bitcoin's price? It was all over the news. Like I mentioned it in yesterday's video. Yes, they captured the president. The Venezuelan people cheered for it, and now we're getting news articles like Venezuela could be sitting on like quite a lump sum of Bitcoin, and could the U.S. confiscate it? We got an article on that, and then also with the oil too going on, can that lower Bitcoin mining costs? So we have those new news articles plus a couple more. Let's take a look at Bitcoin's price right now really fast. We are currently at 92,500. There was just a little dip just like a moment ago because we were at 94,000 this morning. It was like holding that all day yesterday, 93, 94. But what just caused this little dip? Who's liquidating? What just happened? I do not know, but let's take a look at the technical analysis before we jump into the news. We are in a neutral territory, but the oscillators are saying sell while the moving average is buy. So are we going to be going down a little bit more? Or is this just a nice little rebuttal? Well, just have to wait and see. But let's go through the Twitter news. What's going on with Bitcoin on Twitter? Well, it looks like breaking $1.6 trillion Morgan Stanley files an S1 registration for Bitcoin Trust with the SEC. Bullish news there. So adoption still going. People still want Bitcoin, whether it be an ETF version or filing for their own. And now they're going for a Bitcoin Trust, which is awesome. And let's see what else is happening. Also, for more adoption, just in, the White House crypto czar David Sachs met with lawmakers this morning to discuss crypto market structure legislation. This is just punchbowl news. Like we were waiting on that market structure bill, which would just progress Bitcoin and all cryptos even further and even faster with adoption. And let's see, I got some Theta news. I'm still a Theta head. Back in my old day, I always have like a Theta News Network article. I still hold. Got a whole Theta token? Now I'm holding the T-Field token right now, but there has been some changes going on within their ecosystem. Like right now, there is a new governance proposal for reallocating 4 billion T-Drop tokens from liquidity mining to staking rewards that has secured more than 250 million votes so far. They just need another 250 to get this passed. So this is truly showing how a DAO really works and the community votes on changes to the network. So I gotta go in there and vote. I know I have some T-Drop, and the only way to place a vote is if you have T-Drop coins. And again, like last week or 2 weeks ago, there was a Theta lawsuit going on. So if you really want to like pay attention to it, definitely follow Pops and Max Pinecast. Like these guys they've been giving the news reportedly weekly for Theta. So if you want to stay up to date on the lawsuit, you got part 2 Electric Boogaloo, and then more. They just break it down. And they even use some of my old videos from back in the day because I was literally keeping track of everything going on with Theta, the Katy Perry NFT drops out there. So yeah, if you want to stay up to date on the lawsuit that took place a couple weeks ago, definitely check out Pops and Mags. And then let's see, what else do we have? Justin, Bitcoin Depot agrees to a $1.9 million settlement with Maine over a crypto kiosk scam and losses from 2022 to 2025. Victims must file complaints by April 1st, 2026. So yeah, so how do we crack down on crypto ATM scams out there? Like there was over $333 million worth of scams that happened on ATM machines just in 2025 alone. So how do we protect individuals from actually falling for these scams out there? I've seen like in some states they're putting restrictions, like only a $5,000 limit, or they're very low limits for using ATMs. There was one situation in Texas where the sheriff or the state sheriff's department actually broke into a crypto ATM to get a person's money back, but they just really stole from the ATM people. And now we got this where they're settling for just losses going on. So how are we going to handle this? We just gotta wait and see, but they're settling with 1.9 million to do those payouts. So if you were affected by Bitcoin Depot, you have till April 1st to file that claim. Now, what else is going on before we hit up Venezuela and what's going on there? Well, let's talk about how Bitcoin actually just helps families like going on. Like this was a tweet from Sultan saying like 12 years ago, I mined Bitcoin at home in Venezuela to escape a broken system. Today, all my family is outside of the country thanks to hustling and saving Bitcoin for over a decade. If we had waited for the U.S. intervention today, we'd be poor. So we won becoming a self-sovereign family. And you guys can be that too. You just got to start stacking and hodling Bitcoin, whether it's a little amount here and here. Dollar cost averaging is always the safest and best way just to accumulate. And you just hold on to it. You build your wealth. And over time, like that asset pile you have will have grown, especially if you're holding Bitcoin, because that's what we know about Bitcoin. It just always keeps growing. But that's some like good news from like a citizen from Venezuela actually escaping the system, the fiat system out there, and going into the Bitcoin lifestyle. And yeah, he saved himself and his family. So hopefully we get more news about that. But let's talk about now the Bitcoin in Venezuela. Were they hiding $600,000 worth of Bitcoin? Well, let's find out in this article right here. So Venezuela's early crypto adoption and gold to Bitcoin conversion speculation raised questions about a $60 billion reserve through analysts, which have still found no proof about it. So, because yeah, this is all, I saw a lot of posts on Twitter talking about this. So let's see. I just want to get some more details and share it with you. So the U.S. capture of Venezuelan President Nicolas Maduro has renewed questions over whether Venezuela holds an undisclosed Bitcoin reserve, which analysts say remains unproven. So on Saturday, investigative journalist Bradley Hope outlined a theory that Venezuela may be holding a hidden Bitcoin reserve worth up to $60 billion, claiming that its government has been converting gold into cryptocurrency over several years. Now, sources describe a Swiss lawyer who controls wallet access, and Hope said in a co-authored report published by the investigative newsletter, Whale Hunting, raising questions about the alleged involvement of Alex Saab, the Venezuelan Minister of Industry and National Production, and who has been sanctioned by the U.S. Now, although hopes and theories were quickly picked up by the media, major blockchain intelligence platforms have yet to find proof of Venezuela's undeclared Bitcoin holdings. Now, where does the 600,000 Bitcoin figure actually come from? Speculation that Venezuela may hold up to 600,000 Bitcoin has drawn attention, particularly as trackers like BitcoinTreasuries.net suggest that the country has accumulated just 240 Bitcoin, which is about $22.2 million since 2022. Now, the 600,000 Bitcoin figure is not based on on-chain evidence. Rather, it's just a mathematical estimate derived from Venezuela's gold sales since 2018, including a 73-ton sale that year, which accounted for about 40% of the country's gold reserve. Now, if they actually possess 600,000 Bitcoin, then they managed to fool a lot of blockchain analysis. Well Alert co-founder Frank Wirt told Cointelegraph, adding that they need to come with some serious proof for such a claim. And here is that tweet from Bradley Hope. So sources describe a Swiss lawyer who controls wallet access. With Maduro captured, the question isn't whether the regime survives, it's whether $60 billion vanishes into the blockchain forever. And then there's a full investigation article showing that. Now, Wirt also expressed caution about the 240 Bitcoin report by Bitcoin Treasuries, noting that its data is not always backed by verifiable transactions. Now, Venezuela adopted crypto early, but holdings remain opaque. So while we are still looking into potential Maduro regime crypto holdings, it's important to note that Maduro regime has been experimenting with cryptocurrencies for years. In fact, long before most of the governments, said Ari Redboard, global head of policy at blockchain intelligence company TRM Labs. And under Maduro, the Venezuelan launched its oil-backed national digital currency, the Petro, in 2018, a project that was shut down after 6 years. Now, the government directed state entities to adopt crypto-based payment mechanisms, particularly for oil-related and cross-border transactions. Now, Redboard noted, adding that Venezuela has routed oil sales through digital wallets rather than traditional banks. Now, Venezuela has also emerged as a major adopter of crypto amid spiraling inflation of its local currencies. The Bolivar, the country ranks 11th among the top 20 for crypto adoptions in 2025, according to the report from TRM Labs. And is this the chart showcasing, the top 11 countries for crypto adoption? So India took number 1, and actually both for the full year 2024 and from January to July. United States is number 2, Pakistan 3, Philippines 4, Brazil's 5, and then you got Vietnam. We're looking at Venezuela. Oh, they rank 11. So Bolivar and Republic of Venezuela. So they're number 11 on that chart. But despite early adoption and growing popularity, Venezuela's crypto holdings include a potential Bitcoin reserve, and it still remains opaque. Platforms like Arkham do not track Venezuelan government-linked wallets. Chain Analysis and Elliptic declined to comment. Now, Ariel Barthier, head of research at blockchain analytics platform Nansen, told Cointelegraph that there are some Venezuela-linked wallet clusters, including state-aligned exchanges like Cryptolago or Cryptolago. Now, however, attribution remains difficult due to the use of fragmented, unhosted wallets and specialized offshore, over-the-counter brokers to mask the ultimate destination of funds, Barthier said. Now, this was the post I saw yesterday, the video on CNBC. So CNBC says U.S. could take control of Venezuela's Bitcoin and cryptocurrency reserve. So this is where it really all started, and like with them getting the 600,000 Bitcoin number. But for large-scale asset conversions, one looks for peeling chains, where massive sums are fractionated into smaller, less suspicious transactions across long sequences of addresses, that analyst said. So Barthier also mentioned that there's multiple obfuscation methods, including coin mixers like Tornado Cash, cross-chain swaps, and state-controlled mining for generating clean coins. Now, while advanced behavior analytics and clustering heuristics can often reconstruct these trails, they still remain highly effective at maintaining plausible deniability unless the underlying private keys are compromised, she said. Now, Cointelegraph approached Will Hunting Bradley Hope for comment regarding Venezuelans' alleged Bitcoin reserve in the U.S. Department of Justice about the potential crypto seizure effort, but still have not received any response by publication. So it's still just up in the air. Nothing has been proven that they have 600,000 Bitcoin in their reserve, like hiddenly, securely. So unless it gets proven, I will let you know if that does. But if it does, that would definitely really kick up the Bitcoin strategic reserve, just adding to that stockpile, definitely putting the U.S. in number one for at least country holdings of Bitcoin. So that would be very bullish. But hopefully the government stops selling Bitcoin. I was seeing a couple of posts out there that they still sold some Bitcoin even after President Trump's executive order out there. So what's going on? But we definitely need to add more Bitcoin to it. So hopefully the United States starts adding to that reserve since they started mentioning it. But that's our first news with Venezuela, like potentially hiding 600,000 Bitcoin. Now let's talk about the oil side and how the U.S. access to Venezuelan oil could eventually lower Bitcoin mining costs, and that was said by Bitfinex. So Bitcoin mining electricity costs could fall if Venezuelan oil production increases though it may take several years before the benefits are fully realized, said Bitfinex. So it wouldn't happen right away, but it will take time. But the U.S. companies moving into Venezuela to extract the country's enormous crude oil reserves could lower electricity prices for Bitcoin miners and improve their profitability margins. Now, analysts at crypto exchange Bitfinex said that cheaper and more abundant energy would improve miner margins globally and could unlock a new phase of mining expansion, particularly in regions able to secure long-term power contracts, the Bitfinex analyst said in a note on Monday. And the U.S. started seizing Venezuelan oil tankers in December, and it is expected to start extracting Venezuelans 303 billion barrels worth of crude oil reserves after capturing Venezuelan President Nicolas Maduro on Saturday. Now, Chevron is the only major U.S. oil company currently operating in Venezuela, but U.S. President Donald Trump is pushing for other major players to enter the country to start producing. Now, the intervention will have immediate spillover effects in the energy markets and second-order implications for Bitcoin. And the broader cryptocurrency market, the Bitfinex analyst said that while adding the only fraction of Venezuela's oil reserves would need to be tapped to meaningfully impact energy. Now, here is a tweet from Kobesti's letter. In case you don't realize what just happened, Venezuela holds the largest oil reserves in the world at 300 billion barrels. The U.S. is now running Venezuela with large U.S. oil companies moving in, according to Trump, and the U.S. now controls the largest oil reserve in the world, and whoa, that is a lot. So this could provide much-needed relief for Bitcoin miners whose profitability has been squeezed by 25% in Bitcoin from its all-time high. Rising mining difficulty and increased electricity costs definitely played a role in it. But increasing Venezuelan production will take time. So, however, any meaningful increase in Venezuela's output would take years, not months, and the Bitfinex analyst said that adding that the pace will hinge on how the U.S. handles Venezuela's political transition and sanctions that linger over the South American country. Now, it may even take a decade for the U.S. to make the most of Venezuela's oil reserves, said Matt Mina, crypto research strategist at crypto asset manager 21 Shares. And he said in a note that while long-term potential is vast, analysts estimate that it would require a decade and over $100 billion in infrastructure investing to restore the country to its former status as the production powerhouse. Now, Venezuelan oil production has tanked over the decades. In the 1970s, Venezuela produced around 3.5 million barrels per day, representing roughly 7% of the global crude oil output. Now, but that figure has since fallen to around 1 million barrels per day and now only accounts for about 1% of the global production. Now, Venezuela's economic output has contracted sharply over the past decade, marked by hyperinflation that has eroded the bolivar's purchasing power since 2013, alongside widespread political and institutional disruption. Now, crude oil price fell following the U.S. intervention, with the U.S. benchmark dropping to roughly $58 per barrel, which is down 3% from the December high of $60. Now, a marginal relief for Bitcoin miners whose electricity costs rely on crude oil. As for the broader crypto market, Bitfinex analysts said that prices are likely to be driven less by energy fundamentals and just more by shifts in the macro risk appetite, volatility, and then cross-asset positioning. So this is like a bullish news article for Bitcoin, but it's just not going to happen overnight. As they say, analysts are predicting that this could take 10 years for at least the country to become another powerhouse, and Bitfinex analyst is saying that this is going to take a couple of years until we can see like Bitcoin mining costs go lower because of this. So that's what we got in store for. But that is really what just took place in Venezuela can affect Bitcoin. The reducing the oil mining, and which in general just reduces the cost of energy, which Bitcoin is just energy. And if you sign up for our crypto class, we do have a class today, which is Bitcoin as energy, how to review it. So when you're lowering the cost of energy, pretty much you're lowering the cost of Bitcoin mining. And then also, again, if Venezuela actually has 600,000 Bitcoin, then that's definitely going to, and if we can get that on our strategic reserve and hold it for the long run, and just that way it's just Bitcoin not being used, that will definitely cause Bitcoin's price to go up too in the future. So definitely bullish news coming from what just took place out there. Now, let's see, what else is going on in the news today? I only got 3 articles for you. Before I go into our next article, where Grayscale declares first Ethereum staking payout for its US-listed ETFs, let's take a quick commercial break, and then we will be right back with all these more news articles for you. So see you in a second.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine, Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.
And we are back. And yes, if you guys want more information, just go to bitcoinben.io, check out all our clubs, check out what we can offer. We offer one-on-one consultations, online classes, and also all those programs. I think the best one to take advantage of is the confidential bulk purchase program. So if you're looking to buy more than $5,000 worth of Bitcoin and you want us to be private, maybe check us out. So let's continue on with the news. What else is going on? So we said Grayscale declares its first Ethereum staking payout with their ETF. So yeah, they just approved that. I think not so long ago where they allowed ETF staking to happen with the ETFs. At first, it was a no-go, but then I think it changed. And now the people are getting rewarded for staking Ethereum. So let's go through this article. So the cash distribution stems from staking rewards earned after the fund enabled Ethereum staking back in October. So yeah, that's when it made its change. So Grayscale has declared a staking reward distribution for its Ethereum staking exchange-traded fund. The first time a US-listed spot crypto exchange-traded product has scheduled a payout tied to on-chain staking activity. Now, Grayscale's Ethereum Trust ETF shareholders will receive about 8 cents per share from proceeds of the sale of staking rewards. Now, with the payout scheduled for Tuesday based on holding records at market close on Monday, and according to a press release published Monday, Grayscale activated staking for its Ethereum products on October 6th. Now, with staking conducted through institutional custodians and third-party validator providers, the move made Ethereum Grayscale ETF Mini Trust the first U.S. spot crypto ETF to gain exposure to Ethereum staking. Now, staking is the process, if you didn't know, of just locking up cryptocurrency on a proof-of-stake blockchain to help validate transactions and secure the network in exchange for periodic rewards. In this case, Grayscale's Ethereum Trust ETF rewards are converted to cash and then distributed to investors in dollars rather than being paid out in Ethereum. So if you staked a loan, you'd be getting Ethereum back. So the way staking works is kind of different than Bitcoin mining. Bitcoin mining, you need the machines to run the network, verify the transactions, and validate. But with proof of stake, the idea just comes from there was the big thoughts on like the energy consumption of Bitcoin for mining and with these machines and everything. But with staking, you're just locking up a coin for a set amount of time, which is set in a smart contract. And then by it being locked up, the smart contract activates and then validates transactions on its networks. And then you get rewarded for that, just like how Bitcoin is. When you solve a block in the blockchain, you get rewarded Bitcoin. And every staking has its own prerequisites for how it gets earned. But let's continue on. So that's a little just tidbit on staking and Bitcoin mining. If you just one of the difference of proof of stake versus proof of work. But Grayscale funds operate outside the Investment Company Act of 1940, the primary statute governing U.S. ETFs, a structure that permits staking but carries different regulator protections as traditional U.S. ETFs. Now founded in 2013, Grayscale Investments is a digital asset manager that sponsors crypto investment products with about $31 billion in assets under management. And according to the company, the ETF was up around 2% in early day trading, according to the Yahoo Finance data. So it looks like these Grayscale Ethereum Trust ETFs are valued at $26 per share. And that's what they just said. Anyone who owns one share should be getting about 8 cents on that. So what would that be? You would need at least 10 shares just to get 80 cents worth of crypto. How much would it take to get to 100? Add 2 more shares. So basically, if you had 13, you earned $1 from the staking. But US spot Ethereum ETFs and the push towards staking. While Grayscale is currently the only US traded fund to issue payouts linked to Ethereum staking, several spot Ethereum ETFs from major asset managers are just awaiting regulatory approval from the US Securities and Exchange Commission to do so as well. Now, in March, the CBOA BZX filed a proposed rule change with U.S. regulators seeking approval to add staking to the Fidelity Ethereum Fund. The proposal would allow the fund to stake some or all of its Ethereum through third-party providers and followed a similar filing submitted in February for 21 shares co-Ethereum ETF. And then also back in November, BlackRock registered a staked Ethereum exchange-traded fund in Delaware, an early procedural step towards launching a staking-enabled product that would sit alongside its existing spot Ethereum ETF. Now, its iShares Ethereum Trust ETF, which launched in July 2024, currently does not include staking. So again, yes, a lot of these ETFs that came out did not have the ability, but it looks like they're working on getting another one out there, which would include it. Now, US spot Ethereum ETFs began trading in July of 2024, making 2025 the first full calendar year in which they were available to investors. Now, during the year, the funds attracted $9.6 billion in inflows, and according to CoinMarketCap data, the US spot Ethereum ETFs collectively managed about $18 billion in assets. Now, BlackRock's iShares Trust is the largest by market cap with roughly $11.1 billion, followed by Grayscale with 4.1, and then Grayscale Ethereum Mini Trust with 1.5. So yeah, so that's pretty cool. That's people who got into ETFs are really those like who didn't want to really jump head first into crypto, to be self-sovereign, take control of the finance. You have your self-custody wallet, you protect your seed phrase. Like a lot of people didn't want to deal with that, but they want still exposure to the crypto market, and that's where these ETFs came to play. So yeah, that's pretty cool though, that these people who got a little bit of exposure is now gaining a little bit of exposure of how the staking side of crypto works too. So pretty cool. So I look forward to getting more news articles for more payouts happening, because that's just great news out there. But that's what's going on with Grayscale's ETF and staking. So very, very nice. Now let's talk about how South Korea may freeze crypto accounts before gains are cashed out in major crackdowns. So hence why you want to keep all your crypto in your self-custody wallet, because if you live on exchange, you're abiding by their rules. And if they choose to freeze your account, they can do it. So self-custody is always the only way to go. But authorities aim to extend stock market enforcement tools to crypto, blocking suspicious transactions before profits can be moved or laundered. So I guess this is kind of their way of trying to keep people protected. I don't know. Again, it's kind of like a double-edged sword. It can be used for protection or be used to hurt you. But the South Korean financial authorities are weighing a new enforcement tool that would allow them to freeze crypto-related accounts before suspected gains are cashed out. Now, the proposal, described as a payment freeze system, is intended to stop suspects from withdrawing, transferring, or otherwise concealing profits while investigations are still underway. Now, officials warn crypto profits are escaping reach under the current rules. So, local outlet Newsies? How do you say that? Newsies? Let's call it Newsies. Newsies reported that the Financial Service Commission discussed the idea during a closed-door meeting in November while reviewing a virtual asset price manipulation case. Now, regulators concluded that the current legal framework leaves a critical gap under existing rules. Authorities must first secure a court warrant during a prosecution phase to seize or preserve assets, as a process that can take time. Now, in a fast-moving crypto markets, that delay often gives suspects the opportunity to move funds into personal wallets or overseas platforms, effectively putting them out of reach. So officials familiar with discussions said that investigators are increasingly encountering manipulation schemes that generate large unrealized profits. Now, these include front-running automated wash trading, repeated high-priced buy orders, and coordinated profit-taking. While some gains still remain on exchanges as unsold assets, others can be quickly withdrawn once prices peak. Now, regulators argue that being able to freeze accounts at an early stage would prevent suspects from monetizing those gains or hiding them before charges are formally filed. Now, the proposed mechanism would mirror a system already used in the stock market, amendments to the Capital Markets Act that took effect in April 2025 and introduced the ability to suspend payments on accounts suspected of unfair trading or illegal short selling. Now, the authority was first exercised in September in a high-profile case involving a $100 billion won stock manipulation scheme. At the time, regulators froze 75 accounts linked to a group of wealthy investors and financial professionals, preventing the withdrawal of both realized and unrealized profits. Now, authorities later said the suspects had generated roughly 40 billion won in gains, half of which had not yet been sold. Now, during the November meeting, the FSC members pointed to the case as evidence of the approach could work in crypto markets. Now, several participants reportedly agreed that a similar tool should be considered under the second phase of South Korea's virtual asset legislation. And one official noted that virtual assets are even easier to conceal than stocks once they leave regulated platforms, making early intervention more critical. Now, the crypto oversight in South Korea enters a more aggressive phase. So, South Korea's first phase of crypto legislation was the Virtual Asset User Protection Act, which took effect in July of 2024 and focused primarily on investor protection and prohibiting unfair trading. Now, while it strengthened the obligations of exchanges to monitor and report suspicious activity, it did not grant authorities broad powers to preemptively freeze those assets. So the second phase, which is yet to still be formally introduced, is expected to address stablecoin market abuse and enforcement gaps highlighted by recent cases. So the push for strong tools comes as regulators ramp up oversight across both traditional and digital markets. Now, in July of 2025, the South Korea established a joint response unit involving the Financial Supervisory Service and the Korean Exchange to speed up investigations into major manipulation cases. Now, surveillance systems have also been upgraded with artificial intelligence to better detect repeat offenders and media-driven price manipulation. Now, the broader crackdown extends beyond just trading abuse. In December, regulators began reviewing proposals that would hold major crypto exchanges to bank-level liability standards following a $30 million hack at Upbit. Now, here is a tweet from Crypto News just announcing that South Korea plans bank-level liability rules for crypto exchanges because of the Upbit hack. Now, officials say these measures reflect a shift toward treating digital assets with the same regulatory seriousness as traditional financial products. So, interesting that they're going to be going this route. Like, is it good for them? Is it not? I don't know. I just love seeing like articles of just like how other countries are adopting crypto and blockchain. What are they doing? What rules are they going to come up for? And like as we see it, it's like is this going to increase adoption or stifle it, hold it back a little bit? So it's always interesting seeing what they're doing. So if they do this, I don't know if it's going to stifle it, but just may further push people to go to the decentralized side, the DeFi space of crypto, where the centralized system has no control of this side at all. So it could, if I can see this pushing that side more for the adoption of DeFi. So, but again, centralized side, though, a lot of people just like that. They enjoy people who other parties to control your assets. It's like it's going to hurt them more if they make a mess up or whatever. But yeah, so that's what's going on in South Korea. I'll keep you informed on what's going on there. And lastly, in the news, we have a predictions market move. It looks like they're now tapping into real estate. So yeah, let's go through this one. So Parsol's native PRCL token surged over 100% following the news of a partnership which brings housing price indexes into prediction markets. So if you want to be now making prediction on housing prices out there, so it used to be just like basically government or political votes, sports bets, and all that, but now it looks like real estate's going into prediction markets. So Parcel and Polymarket have partnered to launch real estate prediction markets that will settle against Parcel's daily housing price indexes, bringing house price data into prediction markets for the first time. Now, under the partnership announced Monday, Polymarket will list and operate markets tied to movements in housing prices indices, while Parcel will supply the index data used to determine the market outcome and settlement values. Now, each market will link to a Parcel resolution page showing the final settlement value, historical data or historical index data, and the methodology used to calculate the index, providing a standardized reference for verifying outcomes once market close. Now, the initial rollout will focus on major U.S. housing markets with contracts structured around whether local home price indexes rise or fall over set periods, as well as threshold-based outcomes tied to published index levels. Now, the company said the rollout will occur in phases, beginning with a limited set of high liquidity U.S. cities and expanding to additional markets and contract types over time. Now, Parcel, a platform founded during the early months of the COVID-19 pandemic, was when housing markets became volatile, publishes real-time housing price indexes and analytics, and operates on-chain products tied to the residential real estate prices, using Solana for its settlements. Okay, I always wonder what chain they use, and going with Solana, not bad. Now, Parcel's native token, PRCL, was up about 120% over the past 24 hours at the time of writing, according to CoinGecko. So, whoa, was this literally that just happened? So, somebody just had a nice little 2x in their portfolio if they've been holding on to this coin since then. But Polymarket is a prediction market platform, if you didn't know, where users trade on real-world events, ranging from sports and politics to forecasts for Bitcoin price on a given day. Now, the prediction markets have expanded in 2025. We had so much news about like Kalshi, Polymarket, and other ones rolling out, Crypto.com, like trying to get in on it. But after a surge in user activity during the 2024 US presidential election, prediction markets such as Kalshi and Polymarket became a mainstream narrative in crypto of 2025. Now, both platforms secured high-profile partnerships during that year, including Kalshi's deal with CNBC and Polymarket's partnership with DraftKings and the Ultimate Fighting Championship, as well as Prize Picks. So yeah, Polymarket had a couple more partnerships, but that deal with CNBC and Kalshi, not bad. Now, in September, Polymarket was reported to be weighing a U.S. launch while seeking new funding at a valuation of up to $10 billion. Now, the discussion followed a report by $200 million raised in June, led by the Founders Fund and the investment company co-founded by Peter Thiel. Now in November, Kalshi also was reported to have raised $1 billion, valuing the company at roughly $11 billion, with Sequoia Capital and Capital G leading the round. Now the raise followed a $300 million funding round in October. And here's what Polymarket usually looks like too for the bets, like for political, sports, or whatnot. Like usually it goes, will the U.S. invade Venezuela by ? And people would vote on whether it's January 3rd, March 31st. You can go and like here are like the odds for that. I think for what you could win. So if you click no, there's a 5% chance that's going to happen, which means the reward would definitely be huge. Or then March if you said yes. So you can really vote yes or no. You had other choices like Venezuela year ends 2026, which NFL head coaches will be fired, and another U.S. strike on Venezuela. So like there is so much things you can bet on now. It's crazy, but it makes it fun. Like adding this to the crypto space is crazy. So now that we get real estate index prices, it's just another perk to it. But honestly, like the best thing about these prediction market platforms is just the raw data we actually get from the actual people of the world who are using this. Like we actually see what people are voting on, what they believe is actually going to happen out there. So that amount of data is crazy in itself alone. But that's pretty cool though that real estate's getting added into it. So maybe I'll play along with it. But that is it for the news, guys. I hope everyone has an awesome Tuesday today. It's Taco Tuesday. Go get some delicious taqueria-style tacos, which, man, I really want that. It sounds so good right now. So everyone have a great Tuesday. Let's take a look at our Fear and Greed Index. We are still at a 49 neutral right now. So actually, I think that went up a little bit since yesterday. So very nice. So who knows, like this little tiny dip back down. We only really dripped off from 94 to 92.5, down 1,000. So what is that? Down 0.23%. So nothing else. Like, I don't think this is a dump right now. But again, you still never know where the price will go. I would hope it goes lower because I want to buy more. But if it goes higher, I love it too, because then my portfolio just goes even higher. But yeah, so Bitcoin's currently at 92, Ethereum sitting at $3,200. Oh, nice. We passed the 3,000. XRP, yeah, we're at $2.27. So we passed that $2 range because it was going under a little bit. It's like, where's XRP heading right now? Solana's at $138, which was which platform was that? That was South Korea? No, that was No. Man, which one was I? Oh, wait, no, that was Parcel, the company with the ledger, so using Solana's network. That's right, and we're on 29 cents. But yeah, so guys, that's the news I have for you. I hope it keeps stacking and hauling your Bitcoin. Join our crypto club. If you need help with anything crypto, give us a call. That's what we're here for. And here's our number going down the screen if you want more information about our program. So yeah, definitely give us a call at 941-413-8080. So everyone have an awesome day, and I will see you guys tomorrow with some more crypto news. Peace out, guys.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine? Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.